Imagine waking up one morning and suddenly everything is more expensive. Your money buys less, your energy bill has doubled, and your government is in a battle with the EU. This isn't a movie. This is Hungary today. What's happening? Why is the Hungarian economy struggling? And most importantly, what's next? Stay with me, because what I'm about to tell you will change the way you see Hungary's future. All right, let's break it down. The economic storm. How bad is Hungary's economy, really? Well, let's just say it's not looking great. In fact, it's one of the worst hit in Europe right now. Hungary is caught in a massive economic crisis. Inflation is at record highs. The Hungarian Forint is losing value. And foreign investors, they're leaving in a hurry. A few years ago, Hungary was booming. Businesses were expanding, wages were rising, and foreign investments poured in. But today, everything has changed. The cost of living has skyrocketed, and everyday Hungarians are struggling to afford basic necessities. Hungary's inflation nightmare. Imagine buying a loaf of bread for 500 forint last month, but today it costs 650, and next month, who knows? Inflation has soared over 25%, the highest in decades. Food prices alone have risen more than 40%, making daily essentials unaffordable. Rents, fuel, and electricity bills have doubled. The Hungarian forint is in trouble. You know how strong currencies hold their value. The forint is doing the opposite. The forint has lost 10% of its value in just 1 year, making imported goods even more expensive. Despite government efforts, the situation keeps getting worse. Investors are leaving. Hungary was once a magnet for foreign investors, but now they're moving their money to Poland and Romania, leaving Hungary behind. But why is this happening? It's not just bad luck, it's political battles and EU tensions. Hungary is in a high-stakes battle with the EU, and it's costing them billions. For years, Hungary has been clashing with the European Union, but now things are at a breaking point. The EU has frozen over 20 billion euros in funding meant for Hungary, a massive blow to the economy. Why is the EU holding back money? The EU believes Hungary's government is too powerful, controlling the media, courts, and public funds without enough accountability. As a result, they're refusing to send crucial financial aid. Imagine being part of a club, but the leaders say you're breaking the rules, so they cut your allowance completely. That's exactly what's happening to Hungary. Without this funding, Hungary is seeing slower economic growth, fewer investments, and rising uncertainty. Hungary's response: defiance and isolation. Instead of fixing the EU's concerns, Hungary's government is pushing back even harder. They're making independent deals, seeking alternative funding, and refusing to change their policies. The problem: this is isolating Hungary from key trade partners like Germany, France, and the Netherlands. Without allies and investments, the economy could struggle even more. Less EU money means fewer jobs, more inflation, and economic uncertainty for millions. But that's not the only problem. Now we have to talk about Hungary's energy crisis. The energy crisis. Here's the situation. Russia cuts off gas to Europe. Countries scramble for alternatives. But Hungary? It's still shaking hands with Moscow. Most European countries are reducing their dependence on Russian gas, but Hungary has done the opposite. It still relies on Russia for more than 80% of its energy, putting it in a dangerous position. The risks of dependence on Russian energy. By signing long-term gas deals with Moscow, Hungary has secured a steady supply, but at a huge risk. If Russia raises prices or cuts supply, Hungary could face an energy crisis overnight. At first, the Hungarian government tried to protect citizens by capping energy prices, but as costs rose, those caps were removed, leading to skyrocketing electricity and gas bills. Imagine checking your energy bill and seeing a 200% increase. That's what many Hungarians are dealing with today. Other European countries are finding alternatives. Germany turned to Norwegian gas, France expanded nuclear energy, and Poland built LNG terminals. But Hungary hasn't made these moves, keeping it trapped trapped in energy dependence on Russia. If another energy crisis happens, Hungary could face blackouts, factory shutdowns, and even a deeper recession. There's another crisis happening every single day. Hungary's collapsing currency. The forint is falling. Imagine this. You get paid today, but next month your salary buys 10% less. That's life in Hungary right now. The Hungarian forint is one of Europe's weakest currencies, and it's losing value fast. In just 1 year, it has dropped over 10%, making life more expensive for everyone. What happens when a currency falls? A weak currency means higher prices for food, fuel, and imported goods. People earn the same wages but can afford less. It also scares investors away, making Hungary even less attractive for business. The Hungarian central bank has tried to fix the problem by raising interest rates, but this made loans and mortgages too expensive, hurting businesses and families even more. Imagine saving up for something only to realize the price jumped by 20% before you could buy it. That's what millions of Hungarians are facing today. If the government can't stabilize the currency, the economy could sink further. Investors need trust in the forint, but with EU funding blocked and inflation rising, that trust is fading fast. So, what's next? Can Hungary turn things around? Or is this just the beginning of an even bigger crisis? What's next? So, what's next for Hungary? Will it fight its way back to economic stability? Or are things about to get even worse? The Hungarian government is promising a recovery, lower inflation, stronger growth, and stability. Officials claim that economic reforms, energy deals, and negotiations with the EU will help bring back investor confidence. Hungary is facing two massive challenges: fixing its economy and mending its relationship with the EU. Without EU funds, the government will struggle to invest in infrastructure, businesses, and social programs. The longer Hungary remains at odds with Brussels, the harder it will be to regain trust from international investors. Will Hungary finally secure EU funding, or will it be left out in the cold? What does this mean for Europe? Hungary's economic troubles don't just affect Hungarians, they impact all of Europe. A weak Hungarian economy could disrupt trade, slow down regional growth, and create more division within the EU. Other European nations are watching closely. Will Hungary change course, or will it continue down a risky path? One thing is clear: Hungary is at a crossroads. Will it recover and rebuild its economy, or is this just the beginning of a deeper crisis? The next few months will decide Hungary's future. Now I want to hear from you. Do you think Hungary can bounce back, or are even tougher times ahead? Drop your thoughts in the comments. I read every one of them. If you found this video eye-opening, don't forget to hit that like button. It really helps this channel grow and brings more content like this to you. And if you haven't already, make sure to subscribe for more deep dives into global economies. Which country's economy should we cover next? Let us know in the comments below. Your suggestion might be our next video. Thanks for watching, and I'll see you in the next one.